on this video, I'm going to be showing you how powerful a liquidity and then anything that has to do with fair value gap is, right? This is from the daily time frame and this is on Euro USD. You can get exactly but opposite analysis, okay, on a DSY, following DSY and then coming to Euro USD. Now you can see that we have this fair value gap. It's an inverse fair value gap because price disrespected this fair value gap. It refuses to respect this fair value gap, which means we were expecting price to come down here and then this place lower. But since that doesn't happen, then you can see price broke through, came back, and then this places, right? So that is what it means to be an inverse fair value gap. So we have a fair value gap and then we have an inverse fair value gap whenever it turns out to play in the opposite direction. Now you see, I told my community on Telegram, this is what we do. It's not really something all about signal. I sometimes post it that, okay, this is where price is targeting, right? This is where price is targeting, and that is that liquidity up there. That was yesterday. I made that analysis that price was going to target that liquidity. You can see it from up there. And then today, waking up to the chart, I saw that price has taken out that liquidity. If you come to the daily time frame, this is all I do: top down analysis. Then I come back to the lower time frame, and then all of that. You can see that fair value gap right here. And then you can see that price is not just moving randomly, right? It's not just moving randomly. There's something that is pushing the market at all time. There's something that is pushing the market. And you can see that price has taken at that high, and then today is Friday. If you have watched ICT video, you know that Fridays is mostly we having retracement back into the weekly candle. Then if you look closely from this time frame, you see that we have a fair value gap on the daily time frame. Don't forget, we are still very much bullish, right? We are still very much bullish. You can see price is rejecting that place. So furthermore, I went down to the 4-hour time frame, and I see that this rejection right here is as a result of this order block right here, or should I say proportion block. And then we have a shift in market structure right here. Now, if I am expecting price to come lower, it should be at least into the discount area of this whole price movement. And then since I had a market structure shift right here and then a liquidity sweep, which was my first target, and then I will be expecting a massive retracement after that, because that was on the weekly time frame. So the retracement is going to be massive on the hourly time frame, right? Now you can see that price traded 50% into this whole DRT dealing range, but I'm not okay with that. I want to see price trade into this fair value gap, right? So coming to the 1 hour time frame this morning, I see that we have a mitigation block right here. Price giving us a market structure shift with a fair value gap and the swing low right here. So what am I expecting? Expecting price to trade back into this mitigation in confluence with a fair value gap, then down into this other fair value gap before I can consider going bullish again, right? This is what I do in the market, right? This is what I mostly do in the market, right? So I have this retracement. I wanted to take this trade, but the risk to reward was not encouraging. I think like 1:1.5 or 1 ratio. It's not up to 1:2, so I didn't even bother taking the trade, even if I was feeling like it's going to play out. You can see it even did from that fair value gap. That fair value gap was confluencing with what I said, a proportion block, right? It was confluencing with that, and then you can see that price is not just moving randomly. There is something happening. So whenever you are losing, it's probably because you fall on the wrong side of the market. The market is never ever wrong. It is not wrong. It is we who are wrong at some times, right? So whenever you are wrong, it is your risk management that is going to save you. So consistency is the key. Risking the same amount at all time is the key. And you can see we have a proportion block right here, but I prefer to call this other block. That is what I call it from most of my video. This right here. Now, guys, you can see it's almost the same analysis on DSY. Now, what is giving me more confidence if this trade into this fair value gap right here from DSY is this. Let me go to the hourly time from there. You see. So I've already made the same analysis on DSY. I'm just waiting for price to come into that zone. Then I'm going to long it up into this gap you see right here. That is my major confidence in the market right now. This gap on DSY. So I don't know why price is playing around, but I want to see price trade lower. Not just seeing Euro USD trade into this zone. I also want to see DSY trade into this zone, because if Euro USD traded into that zone and DSY is closer to trading into this zone, there will be there will be a crack of correlation down there, because DSY is definitely going to trade into that, and when that happens, it's going to stop a lot of people out from this trade right here. Maybe you see that massive retracement, then boom, the next candle pushing higher and clearing a lot of liquidities up there. So whenever I see something like this, sometimes I just run into it and then go into this trade. This is what we call FOMO, fear of missing out. You don't want to miss out the trade, and then the next candle will just print and then boom, takes you out. This is what happens most of the time. So I've been a victim of this a lot, but over time I get past this level and then it doesn't happen to me anymore, even if it still happens to me some of the times, but in a fewer cases now. Out of 10, maybe one. But all of this is something I try not to be a trap of. Don't want to build liquidity, but whenever I get a losing trade, it's fine. I know I'm going to bounce back somehow. So guys, I hope you find this video helpful. Please like and subscribe. Today's Friday. I'm not expecting much if it doesn't come to my zone. I know that on Monday I probably might have a better opportunity to trade the market. So I'm not even bothered. It's still 8:20 a.m. Friday morning. See you guys. And please, if you enjoyed this video, like and subscribe. Thank you. Welcome back, guys. This is just a continuation of the video. So you see how price reacted of this fair value gap right there. You see that fair value gap? I call this setup, and then price went straight to take profit. You can see it right here. I just had to save that the video right there, so you can see that fair value gap is so much powerful. And then you see that price is creating an inducement down here. I see this as an inducement, although we are overall bullish. You see this, and you see this inducement, right? I was expecting price to trade right half into this mitigation block before coming down into this daily fair value gap, but instead price just tapped to the tip right here and then displaces into this fair value gap, then coming back into this zone. You can see that high right there. So what I'll be expecting by Monday, the market will be open in about a few hours. I'll be expecting price to take out this high, taking out a sell section, give me a kind of market structure shift. Then I'll look for a sell opportunity down into this daily fair value gap. You can see that right here. a second time to load. I think my connection or something, but there's a daily fair value gap right here. Let me take all of the symbol out. So you see that, you see the daily fair value gap. So I still be anticipating price to trade lower into this zone before continuing with its bullish move. So until then, let's see what the market has to do. And mind you, this is just my prediction for the market. So if the bias is changed on Monday, I will also adjust to it, right? I'm just predicting what is going to happen in the market using my system. So anything can happen on Monday. The market can just decide to just break above and then close above, right? So it's not in my power to control that. It's in my power to follow the market, control my emotions, and then go with what the market has to offer for me. I hope you enjoyed this video. Please like and subscribe.